my first question to you was, what is the relationship between business and tax?
I mean, it's, since the dawn of time, I mean, people have had to, which any kind of commerce that they've been involved in, even in farming, there's been some kind of taxes. So taxes are inevitable. And, there's a lot of people who grumble about paying tax, but at least if you're paying tax, you're earning money and maybe even, more money than your expenses. That's a good thing.
Yes.
You want kind of surplus. You don't want to always be in a deficit. And people get quite confused between income tax versus GST. They think it's the same. Let's get real about, what is taxed, whether tax is fair. And to be honest, with our marginal tax rates in New Zealand, it kind of is fair, and paying your share of taxes too, to be a sort of contributor in society. Because, like one of the videos I do, I sort of allude to it in some of my messaging, but, like if your kids are going to school, or the last time you used accident emergency, or, did you actually hook your boat up to the trailer, to your Tesla and get on the road and drive down to the boat ramp, that taxes, we need taxes and people to pay some taxes so that those things can still happen, free education, or subsidised education, healthcare, roads, all that sort of stuff. So don't think of tax as a bad thing. It's not a negative.
It's a sign that you're making money and that you're contributing to your community.
Yeah, but it's, it's all part and parcel of being in a successful business. So it might be for some, it's a means to an end. But some people also probably, especially if you're, what about if you're employing staff? And now you've got payroll taxes and you're complying with that level of duty, care, responsibility, and helping them pay their mortgages. Payroll taxes and PAYE and KiwiSaver and all that, it's another form of taxation, but it's really essential that people in business who are responsible for other people's mortgages payroll are actually doing their PAYE compliance and paying that too, because that's a big portion of the tax take that Inland Revenue gets.
So when you're starting out in business, what sorts of things can you do in the early stages to get it right, get the right infrastructure and processes in place to support the well-being of your future business?
Think about kind of every action has a reaction or a consequence. So when you spend money, there's going to be an action that needs to be taken into account. When you earn money, similarly. Right from the start, we would say to people, if you are going into business, get another bank account and separate it from your home or your partner's shared partner's bank account, where your current living expenses come out of. Get really disciplined about just that separation of the bank account. And then that helps you think quite separately, I think, about business income, less business expenses. Don't mix it up like right from the start. Get really disciplined about that. And then you can start getting into things like, depending on your plan for your business, whether it's just going to be you, how much do you think you're going to earn? Then that drives other questions like, should I be GST registered? Should I be a company? A lot of people can quite easily start out as a sole trader, but just have the discipline of that separate bank account, and then very quickly get onto some sort of systemized ledger. And I guess I can't speak highly enough of Xero, because it is so easy for business owners to use, to account for that separate business income and those business expenses. And then it's really easy to work out what your business profit is that you pay tax on.
And when people say, I'm going to write it off on my taxes, what are they talking about?
Oh, they probably heard somebody say that, and so, I mean, there are a lot of, it's sort of misnomers, I guess, and myths, and people hear information from, at the family barbecue, the family barbecue or something like that, and somebody's raving on about, oh, look at my new BMW, and then they're all sort of chatting about, how did you earn that? They don't hear about the 12 hats that they have to wear, all the jobs that they have to do, the sleepless nights, the years of Struggle Street, they just hear, oh, look, you've got a brand new Beamer, and I want one of those as well. So they think what they can do is they could earn $1,000, and then they think that if they spend, they buy a computer, they can write the whole lot off for the purchase of the computer. But you can't, right? Because we can be boring and start talking about the fact that actually a computer is probably over $1,000, and you actually have to capitalize that because the computer has a working life of maybe 3 to 5 years, and you can only depreciate it. You can't write the whole thing off. So, whenever anyone says something like, oh, I can just write that off, it does come from you kind of sound silly saying it because it comes from a place of not really knowing, and you sound a bit silly saying it. So get some advice from someone who actually does this for a living.
Yes. Thank you.
Be a really good plumber, be a really good electrician, be a really good architect, be a really good graphic designer. But unless you've gone to university and you have studied the Income Tax Act, all 4,436 pages of it, I don't think that you're going to be a really great accountant unless you've probably done some study on that as well.
Yes, I like it. Thank you. Because I do hear that it's yes. Thank you. Right, now, when do people need to start reporting on their earnings?
Oh, well, I'll say from day dot, because then you've got it set up. So when I say set up, say for example, you even just get a cash book version of Xero, which is like, and you are GST registered, let's just pretend. So that's like $25 or $27 a month, including GST, to rent that software. And in that software, it has this amazing thing called bank feeds. And that revolutionized accounting for small business owners, because when you log into your internet banking and you see withdrawals and deposits, that's what you see when you log into your software, Xero. And just imagine, like, rather than printing out that bank statement and keying it in all manually, just imagine that it comes in the software. So when it's revenue, you code it to revenue with the GST part, and when it's an expense, deductible, as a direct nexus to earning that income, then you can claim it. Can't write it off if it's drawings. But it's kind of like you can just code it right there and then. So on day one, you could know how much you're earning and how much you're spending. And day 7, day 14, day 21, and especially when you're due to file your first GST return, it's all done for you. I mean, it's not that easy, and I know that Xero kind of is so beautiful, and it makes it sound easy. A little bit of training goes quite far, but really, if you're serious about this and you actually want to make it work, and you don't always want to be reactive, like you want to be doing shit the night before something's due or the day before taxes are due, you want to be doing it as you go so you can see how you're going. Then you you start recording and reporting from day one.
Yes.
As a matter of fact, it's like dieting, right? If you don't actually like write it down, then that frankfurter or that potato fritter, all of a sudden sneaks in, and then you go, why am I still fat?
Well, the reason that I asked that question specifically is because I've seen, as part of my work, I participate in a number of online business chat group forums and things, and I see there's a disconnect between when you have to be GST registered and when you have to talk about your business activities with the IRD or file an annual return or those sorts of things. And people sort of seem to think, oh no, but I'm only doing 20 grand a year, so I don't have to disclose my business activities yet.
Yeah. Again, I think that comes from that place of sort of that murky part of near enough is good enough, which unfortunately was a message that Inland Revenue came out with business transformation, and I think that whole project was definitely big, 15, 16, 17, 18, and we've definitely had the tail end of the business transformation, but it was Inland Revenue saying, let's make tax simpler so that people will want to do it. And near enough is good enough. So Inland Revenue say they're quite okay with individuals, sole traders, even companies filing their own tax returns. And tax agents, accountants, bookkeepers, whatever, we are just like throwing our hands in the air because, near enough is not good enough if you're audited.
Yes.
And they reckon now that this pandemic resource issue, they are now throwing resources and money into the audit team. So we're going to see more audits and the consequences of those audits and court action happening over the coming years. They're back into it now. So if you think, it's all pretty relaxed and they don't really hassle me and, I haven't filed for ages and no one's coming after me, there's a time limit on that and they will come after you.
That's amazing. My next question is kind of dry in comparison to that. That's my next question was, how does GST work? But I think we need to pause for effect because that's really powerful. And I think it ties in with how we started the conversation, which is the 23 hours of the 24 in a day, and making sure that your policies and processes are sharp and efficient so that you are running smoothly all the time and not just reacting to the information that's happening to you.
We do get people who come to us and straight away they go, how much does it cost to do a tax return? Because that's probably what they Googled, right? Oh my God, I need to do a tax return. And so we go, hang on a minute, quite a few questions we need to ask because that's your end point. And what you see is the red notification when you log into their revenue, and that's what you think needs to happen. But I can bet you bottom dollar there's quite a few things. And it would be the same like you said you were doing kind of like loans and all the rest of it, and people coming to you with, snippets, jigsaw pieces of the puzzle that you need to actually put through to loans. And one of the other things that's really important, it's not just, like on day one when you start and you're needing to understand what your revenue is and your expenses and putting all that together, but there's also other things like, what if you're in business and you invoice people and you wait for them to pay you? So those growing debtor balances, now you're in business and you're so busy during the work that sometimes you forget to actually get on the phone and ask those debtors to pay you. Likewise, you're probably waiting for the debtor to pay you before you can pay some of your bills.
Yes.
And so some of the questions that we ask people, and I'm sure you do as well, is not only is this a record of your income less expenditure and this is what your taxable profit is, but what are you owed versus what do you owe? Because we kind of need a full picture of your assets and your liabilities, not just how you earn some income. Before we can actually really assess what your capacity for earning is and your capacity for servicing a loan.
Yes. And
so many people like they really do just live with money coming in and spending all that money in that bank account, and they don't think about, debtors and unpaid debtors. And of course, the older the debtor is, the harder it is to collect. So we've always found in the past when banks are in a situation where they have to do short-term funding overdraft, they're asking these questions of business owners, and there is a serious lack of understanding out there of their financial position or even where their debtors are at. Or what do you mean bills? I just pay them on the credit card. What credit card? I can't see that in here. And then you find out that they've got like 3 credit cards that aren't even in the accounts that they've been paying bills on, and therefore not record. Well, they've been paying everything, the groceries and
yes,
that sort of stuff, but they forget. Out of pocket expenses. So just kind of understanding the full gambit in which to calculate taxable profit.
And a budget or a forecast showing you how your money moves and where your gaps are that you need to work on in advance, or getting to the point where people are chasing you and you don't know how you cut payment and all of those. We see people where we're asking the simple questions like, what's your turnover and what other loans have you got, and can I have some financials, and they go, oh, I have to ask my accountant, because they don't have that information readily on hand. And you mentioned Xero, and while there is training needed for people to use it really, really well, there's also enough information in there that you can have an overview knowledge of where things are at nowish, because it does update overnight and it is almost real time with, you can see what percentages you're spending on stuff overall and
make smart, quick decisions.
Yep, as long as the business owner is, or they've got someone who is updating those accounts regularly, because that's the whole premise of Xero or real-time accounting. But of course, coming back to that, when inland revenue goes, near enough is good enough. What if, for example, the business owner was not trained and just just money's coming in. Let me just code that to general because I don't know what that is, which is an expense, by the way. And then stuff goes out. And rather than thinking, well, that's telephone, so that could be coded to telephone and printing and stationery and rent and interest and loan payments on my Ford Raptor and all of that sort of stuff. They just code all that to general. And then, so what you're going to see is like the accounts are just going to go general, and then it's going to be this weird ass number. There's going to be no distinction between revenue less expenses equals net profit. So near enough isn't good enough, is it?
No.
In fact, it's called garbage in, garbage out.
Yes.
So that's why we always recommend, when people come to us, we, sort of talk to them about what we could do, but we always want to listen. What's the story? What do we need? What do you think it is that you need? And then we say, with their permission, can we log in to your accounting? And we do like a warrant of fitness, a warrant of finance on the ledger. And that, gives an overview of things that could be dangerous, red flags. But, we can glean a whole heap of information out of there. There's a lot of people, for example, that issue out invoices. Say they issue out an invoice for a plumbing job for $1,500, but, Patty Smith, who got the plumbing, can't afford to pay it in full. So she's paying it out of her wages, a couple of $100 each week, just until, she can chip away at it. But what happens is when the money comes in, the client doesn't know to go find, match, split. They actually go receive money. So you've got the invoice out there and receive money. So you're doubling up on your income and you're doubling up on GST. So we can see that straight away when we look in there. And then it's a bit of training, and then we sit side by side with the client and we go, no judgment. We just go, okay, see this? All right, select all, remove and redo. This is how you do it. Okay, cool. Got that one? Mentioned in? Excellent. Get them on the keyboard because that's how they learn. And just show them what happens when you do that. Same if you've got like a bulk payment comes in, you've got many invoices, go find, match, select all. Or, God forbid, you actually get a remittance advice from someone who's paid you and it specifically says what has been paid. Why don't you use that? You're what they sent it to you for. So we see horror stories around bank recs because people don't know to actually reconcile their accounts. They've got all these unreconciled items and they think, that's it. But that in there could people don't know how to do payroll or payday filing if they're not using a software package.
Yes.
And it's complex. Like, I get it. It's complete. In their revenue, we're going to simplify. No, you didn't. Not really. No. So, lots of tricks and tricks for players. And I just don't understand why anyone would hop onto a computer and not really know what they were doing and just go, okay, and submit stuff to the inland revenue and not know that was 100% accurate. I couldn't sleep at night. But I guess that's why I'm an accountant. Not a plumber. I met a photographer and he says to me, I do my own accounts. Oh, yeah. Even end of year. Yeah, I file my own IR3. Well, how do you know that the numbers that you're punching into the IR3 are correct? And he goes, what? And I said, well, how do you know the amounts that you're plugging in are correct? And he goes, well, inland revenue's never come back and said anything. post about that later.
Yeah. Well, yeah. And I think it's one of those things that really cash flow is the health of your business, and you probably need to be a little bit more considerate about how you treat it.
Yep, definitely. And actually someone said to me today something about the numbers in your business and understanding, having some intelligence about the numbers in your business is key to your strategy. But, we've probably gone leaps and bounds there, because actually when you start out in business, it takes quite a while, I think, before people start thinking of those big words like strategy, long-term planning, 5-year plan, big BHAGs. Really, they're just kind of into, whoa, I've done my first invoice of 10 grand and I've got the money. And so also too, circling back to that whole bank account thing, if you had separate bank accounts for the business, kept away from your personal, we might say to someone, well, look, don't just have one business bank account, have 2, maybe even 3. And when you sent that invoice out for $10,000 plus GST, see the GST portion on your invoice, it's really clear, right? Can you see it? Yeah. Okay, when the money comes in, transfer that GST portion there and then to that savings account, and then you can forget about it. Oh, why would I do that? Because it's actually not your money.
Yeah.
Yeah. Or they don't understand the difference between GST and tax, because then when I say to them, the 10 grand that you did earn, actually a third of that's not really yours. What? So another third needs to be put away in savings. Why am I in this business club? Well, yeah. She didn't know you'd have to work for the money. And all this money, but no. Yeah. Oh, well, that is so much to digest and so useful, because I see it every day. I see when we get people, particularly with like the GST and PAYE arrears, the funders consider it was never your money in the first place. And so you shouldn't have been behind on those, because you should have been a bit more disciplined. And it shows, it builds the character component of our financing tests. If you're showing ill discipline, even if on paper your profit and loss looks great, how you're managing stuff comes into the risk that we determine in giving you money. Absolutely, nailed it. Yeah, and the thing about payroll taxes and not paying those is that is somebody else's money. They earned it. That was their gross salary. You agreed to that. In a court of law, they're owed that. But their summary of earnings, that they may be using to get a mortgage and making business decisions for them and their family, you're affecting that. Now, I mean, so, okay, if you're on a payroll package and the good thing about some payroll packages is they take PAYE out at the time and pay it over, so you can't get into that kind of dodgy search. But there are some people who still insist on manually payday filing and not paying over the PAYE, or some people who are just paying, and it happens in the construction industry a lot. They are working it out manually over here somehow and just paying the net amount to the subby and not paying over the taxes. And so that subby summary of earnings at inland revenue is nil. So they go to get, in 3 years' time, they've been paid, they think they've been paid, and they go to get a mortgage or something like that. And so you would be saying, right, show me the last 3 tax returns or the summary of earnings or whatever, blah, blah, blah. And all of a sudden you've earned no money. Like crazy, eh? So I mean, I sort of have a real sort of passion project that businesses like mine should be making it easier, or, is this an ill discipline issue with the business owner, or is it just that they simply didn't know or whatever? So if it's kind of like, if it totally is, an issue around education, then that's what my business is here to educate business owners, so that we can all be accountable and and all pay the right amount of taxes and things like that for a better New Zealand.
Yeah, it's financial literacy for business, isn't it? It's a fundamental part of what we're doing in trade, and getting it right is so important. And they say that money doesn't bring you happiness, but when it's not going well, it can certainly give you some sleepless nights.
Absolutely.
And tax, particularly the big faceless IRD
looming behind you and chasing you and hunting you and all those sorts of things.
Chasing you. Yeah, exactly.
Yeah.
Yeah, but there is a lot of people that don't, understand how GST works. And so sometimes we draw these little pictures, like a cauldron, and then every time you do an invoice and you get paid, because people don't understand the difference between GST on a payments basis or an invoice basis, but that's usually bigger business. But if you're on GST on a payments basis, we'll say, okay, so some money's come in, and that's GST topping up the cauldron. And then if you've got, some GST taxable expenses, there's two things that you have to consider. There's the GST component, but only if you can see the GST component on the GST tax invoice, because there's a lot of people out there that just do tax invoice and claim GST, but they're not GST registered. So there's a few things that you should actually have on the tax invoice to make sure that they're legit. And so, so GST pot goes up, and then you put some expenses, and then it comes down. But not everything has GST on it. And a lot of people don't understand that. They just think, Xero's got got the chart of accounts codes and the GST over there, so I'll just claim everything. So when we do a general ledger review, we're constantly picking up things, correcting the accounts, correcting the GST, looking at source documents, verifying things. And then when we do the GST, they go, that can't be right. Really? You're questioning my ability to do a GST return? Well, let's have a chat about that. So just a total lack of understanding. And it comes down to, as you say, that discipline, because they've gone off and spent the money. And so when they say that can't be right, they're really saying, I can't afford to pay that.
Yes.
But then the Inland Revenue will say to you, okay, if you're on GST on a payments basis, the Inland Revenue will say to you, why can't you pay your GST? Because you received that $10,000 plus GST and that GST component, and you've spent this much on some tax deductible expenses, but we can see that you've taken $5,000 in drawings, and you've gone and bought a Ford Raptor, and you've done this and you've done that, and kind of like, why did you spend the money when it wasn't yours to spend? And perhaps when Inland Revenue say it, the client actually goes, penny drop, yeah. So it's financial literacy. We've been beating that drum for quite some time, and we see some really sad cases that come through. But when you educate them and they understand how simple it is, if they just do these, like 3 things today, then financial health. Or as you say, cash flow is oxygen. If they don't have oxygen, they choke. So, they benefit from it. But there will be some people out there that probably should never be in business, and we can't help all of them. But, everyone needs A, B, C, D, E clients.
They do. I just want to say thank you, Lisa, for taking the time to sit with me today, because tax is such a critical topic for business, and it's important to get it right. The statistics out there are so poor about the longevity of business in New Zealand, and getting the building blocks such as tax right is one of the things that you can do to increase the chances of your survival of your business. Right. And the reason I asked Lisa to sit with me is because I have been following along with Lisa's content for a while, and I find it really easy to digest, easy to understand, and I think hopefully you will too. So if you want to extend the conversation with Lisa and her team and figure out how she can help your business, then I'm going to leave some contact information for her. Yeah, and again, Lisa, thank you. I really appreciate you taking the time to simplify it. It's been really fun chatting to you.
Well, we should do it again, because, this is just the tip of the iceberg, right?
That's only that, exactly. Right. Yeah, that's right. And there's so many other accounting principles that are important for, and as I say, we see it all the time. People go, I say, what's your turnover? And they say, I'll get back to you next week when I get my accountant.
But, we can show people some quick, I don't want to say quick, but really valuable tools to actually empower them a little bit more on some of that stuff. But, tax is essential, and it could be 39, there's a difference between 39 cents in the dollar or, 21 cents in the dollar. So ask, right? If you never ask, the answer is always no. So, but don't just make the assumption, because honestly, like I said, near enough is not good enough, and ignorance is no longer, I didn't know, for example, is no longer an excuse that's tolerated by the Inland Revenue. Bless their cotton socks.
Thank you.